Hi everyone, let's look at business headlines. GIC TPG to invest about $1 billion in retail arm, says Reliance Industries. Reliance Industries Limited said on Saturday, Singapore Sovereign Wealth Fund GIC and global private equity firm TPG Capital invested a combined Rs 7,350 crore, about $1 billion in its retail unit. Reliance, controlled by Asia's richest man Mukesh Ambani, has secured more than $2 billion in investment from global investors, including KKR & Co., Abu Dhabi State Fund Mubadala, and Silver Lake Partners in Reliance Retail Ventures Limited over the past few months. GIC will invest Rs 5,512 crore for a 1.22% stake, while TPG Capital Management will invest Rs 1,838 crore to own a 0.41% equity stake in the retail arm, the company said. This is TPG Capital's second investment in Reliance. In June, the firm invested $598 million in Reliance Digital Unit Geo Platforms. US President Donald Trump is moving to a military hospital for treatment after being diagnosed with COVID-19. The White House said on Friday, as his administration and election campaign scrambled to adjust to an extraordinary twist in his turbulent presidency. Trump, aged 74, will be moved to a special suite at Walter Reed National Military Medical Center in Bethesda, Maryland, for the next few days as a precautionary measure. Out of an abundance of caution, under the recommendation of his physician and medical experts, the president will be working from the presidential offices at Walter Reed for the next few days. Trump has mild fever. According to a source familiar with the matter, White House Dr. Sean P. Conley wrote in a memo that he is fatigued but in good spirits. Finance Minister Nirmala Sitharaman not likely to providing further economic stimulus, says source. Wall Street closes lower as Donald Trump tests positive for COVID-19. US stocks closed lower on Friday as news that US President Donald Trump tested positive for COVID-19 put investors in a risk-off mood and added to mounting uncertainties surrounding the looming election. Tech shares weighed heaviest on the indexes, but the blue chip Dow's losses were mitigated by gains in economically sensitive cyclical stocks. Oil down 3% after Donald Trump gets coronavirus. Trump tweeted late Thursday that he had contracted the coronavirus and would be placed under quarantine, compounding the unknowns for an already volatile market. But stocks paid losses after the White House provided assurances that Trump, while experiencing mild symptoms, is not incapacitated. This injects further uncertainties into the outcome of the election, said Roberto Perli, head of global policy research at Cornerstone Macro in Washington. Equities also got a brief boost after US House of Representatives Speaker Nancy Pelosi's announcement that an agreement to provide another $25 billion in government assistance to the airline industries was imminent. Markets are also paying attention to the likelihood that another stimulus package will pass soon, Perli added. If that happens, it could offset at least in part the uncertainty generated by the COVID news. House Democrats passed a $2.2 trillion fiscal aid package on Thursday, but the bill is unlikely to be approved in the Republican-controlled Senate. Indian IT firms to gain as US court blocks Trump ban on H-1B work visas. Indian information technology, IT companies, and global tech giants may have reason to cheer as United States District Court on Thursday blocked President Donald Trump's ban on H-1B-L and other work visas. The lifting of the ban is seen as a positive outcome for Indian IT service providers, who are the major beneficiaries of H-1B-J and L work visas. The news is positive for the Indian IT sector. Now new employees can be deployed if there is any project that needs to be ramped up or faces a short-term skill gap, said Sanjeev Hota, head of research at Mumbai-based brokerage Sharekhan. However, our discussion with companies suggests that they are still not keen on making employees travel. The top 5 IT companies are anyway aggressive on their local hiring and offshoring strategies to dodge visa issues in the long term. Trump testing COVID-19 positive, a temporary setback for markets. Analysts. US President Donald Trump testing positive for COVID-19 triggered a fall across global equity markets on Friday, which analysts feel is just a knee-jerk reaction to the development. RailTel Corporation files draft papers with SEBI for Rs 700 crore IPO. State-owned RailTel Corporation of India Limited has filed draft papers with capital markets regulator SEBI to raise Rs 700 crore through an initial public offer. The IPO is entirely an offer for sale through which government will offload 8.66 crore equity shares, draft papers filed with SEBI showed. According to merchant banking sources, the IPO is estimated to fetch Rs 700 crore. The Mini Ratna PSU is one of the largest neutral telecom infrastructure providers in the country, owning an optical fiber network on exclusive right-of-way along the railway track. The company provides broadband, telecom and multimedia network across the country. As on June 30, 2020, its optical fiber networks covers over 55,000 kilometers and 5,677 railway stations across towns and cities in the country. ICICI Securities, IDBI Capital, SBI Capital Markets Limited are merchant bankers to the issue. In December 2018, the cabinet had approved IPO of RailTel Corporation for diluting up to 25% government stake. 5 mid-cap stars which refused to buckle during the coronavirus crisis. Global and Indian markets have witnessed a roller coaster ride in 2020. For mid-cap indices which were outperforming their larger peers during the early part of the calendar year, the ride has been bumpier. They were hit harder when equities tumbled during late February and March on fears that economic contraction will hurt the medium-sized companies more. However, with markets recovering, mid-caps have always rebounded and in fact have outperformed benchmark indices by a good margin in the last 2 months. But here is the catch. While 136 of the 150 stocks are in positive territory compared to March lows, the equation is far different if the performance is measured from the start of 2020. Of the 150 stocks, 83 are down by an average 22.9% compared to their share price at the end of the December 2019. Among the 66 in green, their average gain is at 31.3%. This also indicates that many companies are yet to regain investor confidence to the level they enjoyed during the pre-COVID period. Amidst these unprecedented times, it will be interesting to see how some of the top gainers withstood the storm. Here are 5 such mid-cap toppers with stock returns ranging from 60 to 112%. The drivers of these gains and the road ahead. First stock is Tata Communications. The best performer in the mid-cap space has more than doubled in value on the back of multiple upgrades by brokerages. This was due to the expansion of margins in traditional services led by cost optimization and automation. The COVID-19 pandemic and the restructuring of the enterprise communication requirements has led to demand for its products and solutions. This should lead to a strong order book, robust operating profit growth, and improving margins over the next couple of years. Analysts expect its net profit to double over the FY 20-22 period, accompanied by falling debt levels and reduction in losses in its growth services segment. The second mid-cap stock is Escorts. With tractors accounting for 3/4 of its revenues, the company is the major beneficiary of strong volume growth in this segment. A 24% year-on-year growth in the September quarter was led by timely monsoons, record Rabi productions, and early Kharif sowing. Various rural schemes of the government and higher crop prices also helped improve sentiment. Higher availability of retail finance as compared to the situation 6 months ago is an enabler, while the festival season should keep demand healthy. Tie-up with Kubota of Japan will help it tap overseas market and expand its global footprint. Third stock is Mindtree, biggest beneficiary of shift to digital solutions and growth in the high technology space with over 40% revenues coming from that segment. Microsoft, its largest client which accounts for 30% of revenues, has been growing at 35% annually. Its large deal pipeline is healthy and more ramp-ups are expected going ahead, leading to higher revenue visibility and client diversification. New management, change in the strategy, and a strong parent in the form of L&T should reflect in improving growth metrics. In addition to revenue growth, key triggers include margin gains, which should help sustain valuations. The next mid-cap stock is Ipca Laboratories. Growth momentum for the stock was led by prospects in India as well as international markets. The domestic sales growth in the June quarter was better than peers and was helped by the company's leadership in pain management as well as COVID-19 sales. Analysts expect momentum to continue and estimate a 12% annual growth in domestic business during FY20. Export sales too have been robust, helped by drug supplies for COVID-19 treatment to the US and other geographies. Investment in raising active pharma ingredients capacity by 20% will lead to higher backward integration and likely to boost earnings by 26.5% over FY20 to 20. The next stock is Bayer Crop Science. After a good rabi season, a normal monsoon has helped sowing and farm activities during the Kharif season. The clearance of farm bills by government is likely to boost farmer incomes and is expected to be a long-term positive for Bayer. The company's integration with Monsanto has made it a dominant agrochemical and seeds player, while synergies will drive margin mix. Soft raw material prices will aid margins, while expansion, innovative product launches, and ramp-up of specialty portfolio will drive earnings. These triggers should help Bayer post earnings growth of 24% annually over FY20 to 22.